NIO stock has dropped over 95% since its all-time high 3 years ago. Recently, the hype and conversation around that stock have picked up again, especially after the company launched two new sub-brands, ONVO and Firefly. In this video, I'll try to figure out if NIO can turn its financial situation around. Here is the video format. First, I'll walk you through the cars NIO sells and how much they cost. Then I'll estimate how much revenue NIO might make in 2025, including sales from the new ONVO and Firefly brands. Next, I'll look how much cash they're burning each year, and I will try to estimate when they might run out of cash, assuming they won't raise more funds. And finally, I will look on their price to sales ratio and what that tells us about their current valuation. As always, everything I say is not a financial advice. Make sure you do your own research if you decide to invest. Let's start by talking about NIO and its sub-brands. As of now, NIO has three brands. The original NIO brand, ONVO and Firefly. The main NIO brand sells SUVs and sedans priced between $40,000 to $70,000. ONVO is a new sub-brand targeting the mid-range EV market, competing directly with Tesla's Model Y. These cars are expected to sell for around $30,000. Firefly is focused on the budget segment and is going to be sold for $16,000 for one car. So NIO is trying to cover the full spectrum of the EV market, from premium to affordable. For simplicity, I will refer all those three brands as NIO Group. Now let's try to estimate how much revenue NIO could generate in 2025. So far, in the first 4 months of 2025, NIO has sold about 66,000 cars. Around 45,000 of those are related to NIO brand, and the rest of the 20,000 are from ONVO. That means that the monthly car sales for NIO brand is about 11,000 cars, and for ONVO is about 5,000 cars, which they sold monthly so far. Now let's project sales for the next 8 months. Historically, NIO sales are seasonal, which means they sell more in the second half of the year. So let's assume they will sell 50% more cars in the next 8 months of 2025. That means NIO is about to sell around 16,000 cars every single month in the next 8 months, and ONVO will sell around 8,000 cars in the next 8 months of 2025. So for the full year of 2025, the number of units that are going to be sold from NIO brand is about 173,000 cars, and for ONVO brand it will be around 84,000 cars. Together it will be around 257,000 cars. Now let's include Firefly. Since it's a new brand, let's assume modest sales. Maybe 2,000 cars a month, that should be reasonable. So let's say they are going to sell 16,000 cars of Firefly in this year. Now let's estimate NIO Group revenue. Revenue from NIO cars should be around $6.2 billion, which is the product of 173,000 cars that are going to be sold at an average price of about $40,000. ONVO revenue should be around $2.5 billion, which is the product of 84,000 cars sold multiplied by $30,000, which is what is expected to be charged for one car. And Firefly sales can be around $200 million. That brings us to about $9.7 billion of revenue, which I consider a conservative or a base case scenario. If NIO performs 30% better than expected, total revenue could reach around $12.7 billion. So to sum this part up, NIO's 2025 revenue could fall somewhere between $9.5 to $13 billion. Now let's look at their margins and their profitability. Let's say NIO reaches the high end of the estimate, about $13 billion of revenue. If they maintain about 11% gross margin, which is very similar to how they performed in the last quarter of 2024, they might reach around $1.4 billion of gross profit. But their operating expenses in 2024 were around $3.8 billion. And if those stay flat, that would lead us to a net loss of about $2.3 billion in 2025. So unless NIO will significantly cut their cost or improve margins, they're still looking at a net loss of about $2 billion, which is still better than 2024, but it's still a loss. Now let's talk about cash. In 2024, NIO had negative cash flow from operations of about $1 billion. If margins will come around 11% as we've just said before, so the negative cash from operations can be around $500 million, assuming they will generate around $13 billion of revenue. Their capital expenditures are around $1.2 billion, and they have about $1.3 billion in debt that they need to repay in 2025. So overall, NEO may need around $3 billion cash to run their business in 2025. As of now, they have about $4.6 billion in cash, so they should be fine for 2025. But within 24 months, they will likely need to raise more capital, either by issuing shares or taking more debt, which is not a good thing. Now let's talk about how the market is valuing NEO. Right now, NEO has a price to sales ratio of about 1. For comparisons, Li Auto has a price to sales of 1.3, XPeng has a price to sales of 3, and Tesla has price to sales of around 10. So NEO's valuation is on the low end, and that means that the market doesn't believe in their future growth. So here's the big picture. NEO is expanding aggressively, they're launching new products, entering new segments, and they might hit $13 billion in revenue in this year. Also, margins are improving slowly, but they're still burning a lot of cash. If you're new to investing or you'd like a second opinion on stock or investment, you can book a free 15 minutes consultation call with me, and I would be happy to help with whatever I can. So in my opinion, if NEO can control costs and start generating positive cash flow from operation, the stock could have a nice appreciation. But if that doesn't happen soon, they might be headed for serious trouble, maybe even bankruptcy. So let me know what you think in the comments below. I hope you enjoyed this video, and I will see you in the next one.